All right. Well, good afternoon, everyone. Thank you so much for joining us today for today's call, Portfolio Lending, Creative Ideas, and Risk Mitigation for the Loans You Hold On to. This is a part of our TMC Connect series, which is our educational platform. If you've been on LinkedIn, I'm sure you've seen it all over LinkedIn. But it's really where you can go to get relevant content from our members for our members. So we're super excited for today's call. TMC Connect is part of our member benefits, exclusive member benefits. Two other things that fall under that umbrella is Ask TMC. You can go on and ask real-time questions to get real-time answers back from lenders within the network. So if you haven't checked that out, do get connected with your member benefits advocate. And then thirdly is TMC Benchmark, which is a real-time benchmarking solution in which you can stack yourself up against your peers and really see, how you stack up, whether it's across the network or drilling it down to your specific peer group. So like I said, if you're interested in hearing more about any one of those three things, reach out to one of your member benefits advocates. I should have introduced myself. I am Ashley Alexander. I'm one of the member benefits advocates here at TMC, primarily working with our community bank and credit union group. And then our other three fabulous member benefits advocates is Faith Howard Mooney, Sarah Oldani, and Angie, who is new to the team. So just reach out to one of them and they can get you all the information you need. Super excited for today's call and our two amazing discussion leaders that we have on our line, two of my community bank lenders and friends, Melissa Langdale and Jamie. I'm going to say your last name wrong again. I know it. Frederis. Frederis. I'm sorry. So thank you so much for joining, both of you. I know you guys are very busy in this current climate, and so I really appreciate you taking time out of your day to join in and share with our lenders. So with that, I'm going to allow you guys to introduce yourselves and tell a little bit about your organization. So Melissa, if you'd like to introduce yourself.
So I am Melissa Langdale. I am the mortgage director at Right Value Mortgage, which is the mortgage division of Fidelity Bank. Been in the business about 18 years now. Kind of grew up in the business before that. So 18 years on my own, probably 10 before that with parents that wrote me into the business. Spent most of my career on the independent mortgage banker side, and this is my first opportunity to be a part of the banking world. So a little bit unique, I think, in our world to have kind of both sides of things. Fidelity, I joined in January of 2018, and they hired me as their director of mortgage to build out their mortgage platform. They were, up until that point, really outsourcing everything. So I joke a lot that we're 110 years old, but we're only about 2 years old in the mortgage space. So there's lots of things that we've been able to do that's kind of new and fun and refreshing and all of those sort of things, even though we have this strength and the stability of this 110-year-old bank behind us. We are a $2 billion bank. We operate mostly in North Carolina, a little bit in Virginia. We lend on the mortgage side in North Carolina, Virginia, Tennessee, and South Carolina. And, I think one thing that makes us really unique and has driven us down the road of wanting to create portfolio products is our vision for what relationships are. I think everybody that's in the community banking world can really get a good feel for how valuable relationships are to a community bank in our marketplace. And it's been a lot of fun to be a part of an organization that had that same kind of relationship-driven vision. So I'll stop talking about me and let Jamie introduce himself.
Awesome. Well, thank you, Melissa. We're excited to have you and appreciate you joining in for yet another call. I know you've helped us out with many, so appreciate you. And Jamie, would you like to introduce yourself?
Sure. My name is Jamie Frederis. I joined the Mortgage Collaborative in December of last year. I'm in December of this coming year, I'll be in the mortgage business for up to 30 years. So I've done a number of different roles throughout that process, both independent mortgage banker as well as national banks. I think probably some of the more memorable things we're talk about a little bit about. I spent 13 years as a branch manager up in Western New York for Wells Fargo Home Mortgage. Built a team of about 31 originators. Was on and off depending on the model. If we had ops control at a few different moments in time, but spent a lot of time up in Western New York where I'm from. Many people don't know this. Actually took 2014, 2015, left the mortgage business and was a team leader for a Keller Williams franchise for 2 years, which as a mortgage lender, I think we all talk about wanting to spend some time on the other side. And it was truly a great experience. Mortgage lending called me back in. My family and I, we moved out to the New England area where I took over Northern New England and Southern Mass, Rhode Island, Cape and Rhode Island for Bank of America Merrill Banking. And was actually kind of leading the charge in that area for the development of the Merrill Banking platform, where we were doing high net worth lending and what would be considered portfolio lending in the high net worth space. In 2019, I joined Bar Harbor Bank and Trust. Bar Harbor Bank and Trust is a community bank located in Bar Harbor. We joke Bar Harbor Bank and Trust has been up there since Bar Harbor's been up there, but my executive offices are actually in Manchester, New Hampshire. We have about 53 different bricks and mortar traditional branches. We have a trust company, and we're just short of a $4 billion bank. We have been pretty prolific in the portfolio lending space. One of the things that interested me in joining the bank. But I was brought on as well to begin to develop and expand our reach and our capabilities and develop a true mortgage banking platform here at the bank.
Awesome. Well, thank you so much, Jamie, for joining us and, being a new member, jumping right into the mix and being willing to share. We appreciate it.
You gotta be careful what meetings you raise your hand at.
Right.
Next thing you know, you're on a Zoom call.
Exactly. So let's go ahead and jump right in and start talking about portfolio lending. So first question, just trying to lay the groundwork. Why did you, Melissa, I know you guys are just getting up and running with your portfolio products there. Why, you started to speak to this a little bit when you were getting introduced, but why did you guys jump in? What are you, who are you hoping to target? And who are you hoping to help with your products?
We, like I said, we're only 2 years into being really a full lender. And I think because, and by the way, servicing and portfolio products were not in my agenda. The bank brought that to me and said, we are so excited about everything that we built, and you've got all these systems and processes in place, and it's creating this great experience for our customers. And we really want to give people an opportunity because they've said great things about the experience. We really want to give them an opportunity to be a part of our world, even in a bigger way, and have their mortgages sit within our world. So I started really January of last year building out all of our servicing platform, building out policies and procedures for it, and then working on what products made sense for us to launch. And we, the goal really is interest income for our organization, right? That's what any portfolio program is going to give, but it's also going to give relationships, us to be able to take those relationships to the next level. We took a balanced approach to portfolio when we launched. So we've got a first-time homebuyer product, we've got a jumbo product, and we've got the in-between. So we're kind of touching all layers of the markets that we serve and hoping to have an opportunity to add some value there.
And you rolled that out when?
About 2 weeks before COVID.
Yeah. So not only were you rolling out new products, but then adapting to the changing world of COVID. So.
Yes. It's a
Yeah.
brilliant plan.
She recommends it highly. Jamie, on your end, same question. I know you came into the bank and they already had portfolio products. So tell me about who you guys are looking to reach there, as far as your client base.
Sure. Yeah, Bar Harbor had a very well-established portfolio lending platform. Candidly, that was one of the things that interested me in coming over to the bank, because if you've worked for a national lender, you spend a lot of time trying to make your clients fit into the products that you have. And, where on a national basis with a pretty set product set, we all live in different communities that have different dynamics. And so as we look at the portfolio lending area that we serve, Maine, New Hampshire, and Vermont, there's different dynamics in each of those states. We've got seacoast, we've got islands, we've got ski lodges in Vermont, and we've got the Lakes region in New Hampshire. So, the portfolio lending's allowed us to take a look at each of the different markets and build some of the products and some of the underwriting considerations based on the areas we serve. So now, we've not necessarily taken that big bank approach where we're trying to squeeze people into these products, mold them in there. We have the ability to really develop some product sets for each of the communities that we serve. So that was one of the big draws for me coming into the bank. The main thrust, as Melissa put, is to generate a different income source other than fee income for the bank, as well as use some of those relationships that we build to help grow core asset growth with the retail department, possibly trust income with some of the high net worth lending we do in the jumbo space. So we really look at it as not just providing a lien on a piece of property to a client. We look at it as an aggregator to develop deeper and better relationships.
Awesome. Well, thank you for sharing that. Moving on, as far as the current environment, so things obviously changed in March. What adaptations to current products or what new products have you rolled out in the midst of all of this? Jamie, I'm going to go back to you on this one.
Yeah. So that, obviously COVID was a game changer for all of the best laid plans for the new year for all of us. As we took a look at our portfolio lending, some of the things that we took into consideration was increased forbearance opportunities, which I know we'll talk about in a few minutes. But, given the fact that we needed to make sure that we were still, offering the product out to the community so that we could meet some of the lending needs of the communities we serve, we also needed to take a look at, what are the opportunities and where are the risks? So we took a look at some of the opportunities, like we were very strong in the new construction draw process, single close. So we took a look at the aging home stock in our area and said, hey, how can we take this, since people may not be buying homes, staying put, how do we take this product and turn it into a renovation product? So we began to move that direction, and that so far has been pretty successful for people who are staying in their homes, because it's very similar to the construction draw process. We took a look at second home market, and that was more to making sure that we were making good underwriting decisions. So as far as credit changes, we wanted to make sure that we really knew our customer as we were extending credit in the space. And we wanted to make sure we weren't going down the rabbit hole of creating too many cash out bailout situations as well. So we really took a strong look at going deeper with the client, not necessarily pulling products off the shelf we weren't going to offer, but I would say it enhanced our underwriting reviews. We did take off the table, we were doing no MI loans, 85 and up to 90%. We felt that probably wasn't in the best interest at this present time, so we did scale that part of the product back. And then we'll talk about, I think, a few minutes, working with our trust partners, doing some pledge products.
Yeah, if you want to share a little bit about that at this point, we can.
Sure. And this is kind of a hangover from my Merrill banking days. One of the things that we heard loud and clear from our client base, especially clients who had a lot of assets on deposit with us, is they didn't necessarily want to liquidate those. As a community bank, we do have a trust department who manages wealth for our clients. So it was a decision that I'm familiar with. We decided to take a look and go down using our portfolio product to create pledges where people, instead of liquidating performing assets in the market, creating tax events upon the liquidation, we used some of the pledge documents that we had through our commercial unit to create a secure pledge account. So where if they, instead of putting 20, 30% down in a situation, they would pledge the assets that were still performing in their trust account, and it would raise our loan to value on the first lien, knowing that we had the pledge in case we had to pay that down. And we've done a number of them, and the customers, our clients, have been happy. Our trust advisors obviously are ecstatic about it because they're able to keep the relationship and keep the assets performing and not realizing a trust event, tax event.
Awesome. Yeah, I love that. And I also love the point you made with, changing your construction into a renovation loan or being able to offer the renovation. I know we were joking on the call before that Home Depot and Lowe's stores have been overflowing since COVID-19. So totally makes sense in this environment for sure. So the next question, how has these products really been able to set you apart in your communities? Melissa, I know this being new on your end, what have you seen the effects be, within your community?
We, even though it is new, it's kind of funny how all the timing of it worked out, right? So our first-time home buyer products, we have 100% financing that's available. We have not scaled that back. We still have our jumbo product that we, with a few criteria, will go up to 100% financing. And so because of that, with the non-QM space completely going away, it really has given us an opportunity to be able to serve our communities in a different way. We have, like Jamie said, we also do renovation lending and construction lending. We run those through the same platform as well. And so that's been a unique opportunity. We're seeing that in our marketplace as well, where more individuals, because they're in their house all the time, they're looking at things and going, I really want to renovate that kitchen, or I really want to do, expand this room, or whatever the case may be. And so we've seen a lot more requests for renovation recently. So we've been able to use this really as a tool for us to continue to reach our markets when others are pulling out, and it gives our loan officers an extra way to get in front of realtors and builders in the area, and our bankers that have these great relationships with our customers that we may be able to serve in a different way. So it's been able to not only serve our bank branches, but also get us out into the market a little bit more, and potentially bring in some extra deposits or some extra relationships into the bank as well.
Awesome. Yeah, Jamie, same thing on your end. I'm sure when the renovation loan came out, it was probably pretty popular.
Yeah, no, it is, and I've spent a few hours in lines at Home Depot and Lowe's recently myself. But I think we've seen that our portfolio platform has opened a few more doors with us. There's been a lot of changes in lending since COVID came out. I think some of the traditional national lenders have made some changes in the products they're offering, which would traditionally be in the portfolio space. So, it's a great message that we've been able to take out in the community, that we have the ability to continue to lend in some of those spaces that other banks have pulled back on. And I think we've been able to take a look at some non-traditional property types as well, being comfortable in the communities that we serve. So we continue to reach out to the real estate community and the consumer, and taking a look at every transaction as a standalone and not just a checklist underwriting. So as we continue to grow that reputation, it's not saying yes to every transaction, but it's knowing that we're taking a good hard look at it, more so than a lot of lending institutions are doing currently, has allowed us to become a resource for more of the referral partners out there.
Yeah, I'm sure it shows who's truly ingrained in the communities. It seems like it sets you apart in that way. So that's awesome.
Mhm.
Melissa, were you going to add there? I'm sorry, I didn't mean to cut you off.
No, it's fine. I was just going to add a little bit to what Jamie was saying, because I think we've, as much as we can talk to our real estate partners and our bankers and our communities about these products, I think it's almost easy for us to cross the threshold of, well, these are the new, the new out of the box, right? The new, maybe they'll take a challenge loan here or there, or maybe they'll, and we've, in our conversations, not only within our team, but also as we're having conversations within our marketplace, we talk about the fact that this isn't necessarily a high risk product by any stretch of the means. Even though we're going up to 100% financing, we mitigate our risk through higher credit score requirements, or lower DTI requirements, or reserve requirements, or those sort of things that help us to have a product that that is a really great performing product, that we can fill this gap, and it really makes sense for us to fill that gap in the marketplace. It's because 100% financing or jumbo financing is very difficult right now.
Yeah, I know we talked about when we were talking before this call about how a lot of folks might view portfolio lending as a dumping ground for all the loans that you can't do anywhere else. And I know we talked about how that is not true. And I don't know if you guys want to talk a little bit more about that on your end, Jamie.
Sure. Yeah, no, I'd kind of dovetail off where Melissa's going. Yeah, I think to mitigate risk and to be successful in portfolio lending, I think there's a big education component that needs to come along with it. Portfolio lending is not the new subprime, and I think I know I've run into it recently, but traditionally I've run into it, especially our referral community can sometimes view it that way. That because I think a lot of reasons we don't do deals as lenders is we tell because Freddie won't take it, Fannie won't take it, or it won't fit in the box. And then they feel that, well, put it in portfolio. Why not? Let's solve the problem that way. So, mitigating risk really comes with an education component, not only to your referral sources, but to your MLOs as well, and underwriters, everyone, and understanding what it is, because it is an opportunity. You need to protect it. So you've really got to understand what the credit risks are, what the bank is looking for, and not default and make it easy just to, save a deal and dump it in portfolio, save a deal, dump it in portfolio. And then that's not really what portfolio is designed to do. In fact, I would say, if you're a leader and you're looking to do more portfolio with your bank, it's a partnership in making sure that, your priorities in lending are aligned with the priorities of your CFO or in finance, as well as risk, and even core deposit growth, because our priority is to lend. We look at it as how much volume did we do, and it's a different model in the portfolio world because you're looking at that margin in net interest income versus fee income. And you've got to have it on the books for a while to realize that goal. So really understanding what it is and what it's not, and getting collaboration from other business partners inside the bank to make sure that your goals and your strategies align with what they're looking for as well, will allow you to really develop a strong portfolio lending platform.
I'll build on that a little bit. We've taken we just did a whole bunch of training for our branch associates, because we are a small commercial bank, and so in the commercial world, they don't necessarily have ability to repay, that we do. And so there's extra layers. So we talk a lot to them about, just like what Jamie said, we have a box. Our box may be a little bit bigger, but we still have a box, so it's got to still fit within the realm of what we're comfortable with. And we take a very similar approach to what Jamie mentioned at Bar Harbor, where we want to know our customers. We want people within our communities to be the people that we're lending to. And so it's really important to us that we are, we're able to keep that loan long-term. So from a credit risk standpoint, we want to make sure people are going to be able to make their payments long-term. From a relationship standpoint, that we want to make sure that we can use this or leverage this to be able to fit more of their needs within our organization. You know, we started to talk about risk a little bit. You okay if I take a tangent
Yeah,
on
go
this?
for it.
So one of the things I mentioned, we are a small community bank, or a small commercial community bank. And one of the things that we have done to mitigate risk, not only on the portfolio side, but also on the loans that we're selling on secondary market, is that we have a self-employed borrower affidavit that we have people fill out that just helps us to understand the impact of COVID-19 on the business. Because we are, we have probably 35 to 45% of our borrowers that go through our process that are self-employed. And so it is a large percentage of our overall pipeline. And so we go ahead and ask them that up front and get documents for us to be able to take a look at it and make sure that it makes sense for them. Just like everybody on this call, none of us are in the business of owning homes. And so it's important for us to, you know, to take those next steps and help them where it makes sense to help them and tell them maybe not now for the sense, you know, in the cases that it doesn't help them.
Absolutely. Jamie, do you have anything you want to tag on there?
Yeah, I think Melissa said it very well. I think there's a lot of similarities in how we look at this. You know, this is most definitely knowing your customer. Bar Harbor Bank of Trust is a very successful, long-time commercial bank, and so we do a lot of work with our commercial partners. They're looking to deepen relationships. Just today, I was on a joint call here where we're doing some development money for a builder who's putting in a subdivision. It really wasn't on my radar screen, but it was on commercials. So we're already open dialogues up about, as you know, they're looking for land release or lien releases on lots. You know, how can we bring in a package to complement the commercial lending experience that the client's having. So yeah, it's a different type of underwrite. There is some relationship decisions that are made based on our knowledge of the people's businesses in the community, as well as with our own bank. And I'm sure a lot of people on the phone, they've all had clients and transactions where it just makes sense to do it, but it doesn't fit the box. And I think, with good responsible underwriting, kind of old style traditional underwriting, the portfolio opportunity may give you an opportunity to make that loan and help the client, as well as deepen a relationship with the referral partner.
Awesome. Yes, all great points there. So not to backtrack at all, but I also wanted to talk about what do you guys see off on the horizon for portfolio products? Anything now that we've come through COVID-19, I'm sure there's still a lot of unknowns, but anything that you're looking at maybe implementing in the future in the portfolio lending space?
Mm-hmm. I'll kind of jump on that one. We talked a little bit about our pledge account lending, and we're certainly going to take that one a little deeper and explore where those opportunities lie with our existing trust clients, as potentially other clients who want to bring monies over and leverage some of that. Looking at the interest-only product for probably the higher end group, people who understand and manage their money. That's a harder qualification. But as we look at people who want to keep liquidity up on a monthly basis, I feel there is a place that we could probably take a look at the interest-only lending and continue down, renovation. I think we're going through the process right now, taking a look at the second half and seeing where the interest income is going to fit into the second half budget and forward. And I think that will, depending on where we want to go with that, will open some doors and hopefully not close some doors.
Great, awesome, Melissa.
We're obviously just getting off the ground, but we're really happy with how our products fill gaps in the marketplace today already. I mean, if you think about what's going to happen on the other end of COVID-19, you've got, like Jamie said, probably a higher percentage of renovation borrowers, but you also have people that maybe want to hold on to their money a little bit more. Maybe they want to keep cash into their pocket and not put as much money down on a home. And so our higher LTV products I think are going to help us to continue to fill that gap. You know, in our market, probably similar to others, we still have a really high demand for purchase. There's kind of this pinned up demand of, I haven't been able to look at houses. My spring market is just, you know, gone, where I was traditionally going to go out and buy a home this spring and close on it by the summer so that I can start school with my kids, you know, by the fall. You know, all of those things are still there. People want to buy. And so we also have an on-time closing guarantee that we do. So we're really happy with what we have to be able to serve, you know, where things are going. You know, so I don't see us making a heck of a lot of changes, but I think there's a good opportunity for us to continue to serve the markets with what we have.
Well, and that's understandable with it being rolled out very recently. So I appreciate the feedback there. And then last but not least, this question's for Jamie, just because I know you've been doing portfolio lending. Do you currently have any that are in forbearance? And what is the plan that you guys are working on as an organization as far as how to mitigate, you know, that as it comes to the third month or and so on?
Yeah, we're just getting into the point now where we may see a second round as an industry. You know, very much like a lot of the lenders out there, when the forbearance topic came up and the GSEs kind of put their rules out, we adopted the same parameters as the GSEs regarding forbearance requests. So we didn't take the stance where you needed to prove suffrage on it. You know, if someone needed it, we got in behind it. I'm happy to say we serviced about 15,000 households in our lending portfolio. That's a combination of GSE service loans as well as portfolio. And we've only had about 2.5% penetration on the forbearances. So we haven't had a lot of that, which we're thankful for. That, you know, the communities are doing better than I think on the national stats. But we have had some. And we've taken a look, and we have, with the portfolio lending, in some of the cases we have experience with them, so we know who they are, what they're going through. Possibly they had a commercial loan with us, so we know that's probably being in forbearance too. So there's a lot of people working on it right now. Good discussions regarding are they full forbearances, interest only forbearances, what they need to be. And so far, all the feedback has been there's been a lot of gratitude that we've been able to accommodate them in the forbearance, and we've had some people already pick up the payment so far. So as we started, all the different states start opening up procedures.
So encouraging things, it sounds like, which is always a good way to end a call. But with that, I wanted to throw it out to the folks that are on the line. We would love for interaction and feedback from folks that are listening. And have you guys made changes to your portfolio products? Have you developed anything new? If you're willing to raise your hand, we can unmute your line and you can share with us. Or if you want to drop it into the chat box, I know Amy is checking there. But also, if you have questions for our discussion leaders today, anything around the portfolio lending that we've discussed, please don't be shy, raise that hand or drop a question in the chat box and we'd be happy to answer it for you. Oh, it looks like we do have a few. Most of them are about recordings, if this recording will be available. It will be available for playback. We'll post it on our website so that you have access to it, and we'll also send it out in an email tomorrow so you can share it out with your teams. And yeah. I know how busy you all are, so if we don't have any other questions rolling in or anyone wanting to raise their hand, I will not hold you hostage. I will let you get back to work and closing loans. I totally appreciate our two wonderful discussion leaders today. Thank you, Melissa. Thank you, Jamie, for joining us and sharing all that you have. And if you have questions going forward and you want to learn more about how you can get to be a discussion leader on one of these calls, just reach out to one of your member benefits advocates and we can get you in the lineup. So thank you so much, and you guys have a good rest of your day.
Thank you.
Thank
Bye,
you.
Thank
everybody.
you.